What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Friday, October 22nd. As always, guys, nothing that is mentioned on the videos or discussed on these videos is financial advice. It is simply financial education. I'm simply trying to teach people how they don't have to slave in a 9-to-5. Instead, all you really have to do is hustle 24/7 in the market to become profitable. So, following up from last video I made, which was 2 days ago, or day before yesterday. Yesterday was a pretty wild day in the market, especially with the whole Trump SPAC going crazy and berserk. And then today we had it go nuts again. And then you had FUN, PHUN. If you didn't see it, go bananas as well. It's been a couple crazy days in the market. But the reason why I've been struggling to make this next video is because someone asked a specific question about using alerts. And normally, like I said in my previous video, I tie it to a specific ticker that I find, do some DD on the ticker, give you guys some highlights, give you some financials, some institutional buying and selling, a short position, and then I try to find a couple targets so that you guys kind of see the consensus of what the professionals, smart money so-called, are thinking a ticker can do. These are a little different because I've already tried to record it twice, and the best way, it can't be planned out. It's just got to be on the fly. So today I figured, all right, we'll let the flow do its thing, and then after the market closes, I'll record a video based on alerts, just going through some processes that I go through to kind of try to find tickers. This is kind of the pre-recording of a video, what I go through, trying to find a really good ticker, because as you notice, or if you've seen in my videos, I always tie it at the end to the option chain. But without further ado, let's get into it. So this is the Unusual Whales website. This is the pricing for any of you guys that are interested. I have no affiliation to Unusual Whales, other than that there's some pretty dope ass dudes that have literally helped my pocketbook a lot. That's why I use this tool so much, because it really is a game changer in my opinion. When you learn how to use this, and I think that's really important thing I need to highlight, learning how to use this is how it becomes effective. Don't just think just buying it, all of a sudden it's just going to start producing money or printing money for you, right? Nothing in the market works that way, right? You got to put some work in. You're going to get out what you put in. But let's get into it. So the specific question was, how do you use alerts? Well, up here you see the alerts tab, and you have options and stocks. We can use both. For today, I'm going to stick to the options one. I think this is the one that primarily a lot of people look for, right? First and foremost, I always make sure that before I do anything else, I hide expired. I don't care about expired options. It doesn't make benefit to me. It doesn't bring me any downside. I just don't want to see it. It makes it cleaner, right? These option alerts are going to be buy alerts by when the option alerted. So as you'll see, 12:57 was the last alert for the day for KRE ticker, right? Now, when I get to this point, you can either filter by a couple different things up here: free, premium. Personally, I use all of them because I want to know what this tool is alerting, because it does work once I teach you how to use it and you tie it to a chart, because there is some charting involved, right? You don't have to be like the technical analysis guru of the world, but it does help if you know some fundamentals about a chart, right? So what I'm looking for when I go through these alerts specifically, I'm looking at this volume section right here, number one. Number two, I'm also looking at the open interest. What I'm trying to find is a huge distinction, right? Like this enormous gap or something that doesn't seem normal, right? And you do that by clicking on the alert and then going through some information on that specific ticker. So let's go through here and see what we find for today. So you got SPY, Snap. We already know what happened to Snap yesterday after hours at earnings reporting. It took a poop on the bed, as they say. Square, PCG, New, Hood. I wouldn't touch Hood if they paid me to touch it. Smile Direct Club. That's an interesting one on a put. Roku. That's a $400 play. WMT. QuantumScape, that's interesting. I like this one. All right, 1,217 volume on 111 open interest. But it's bearish. Nah, we'll leave it alone. Viacom CBS on a put. Oh, this is a sold put because it's bullish. Okay, 628. Interesting. Let's keep going. Let's find something good. 332 on 13. It's 1029. That's next week. Okay, see. So this is the key right here, right? High volume, low open interest. Expiration date recent, bullish, and for Draftkings. Who doesn't know Draftkings? So obviously the first thing I always do, you click on the alert. It's going to take you to this landing page, right? It's going to give you some more information, like the underlying. So it's at 46.54. It's for a $43 call, so it's already in the money essentially, expiring next week Friday. And then this piece is pretty important to me too, that I always like to look at. The 10 big option trades recently, right? It's going to give you an idea of like what is big money doing, right? In a way, not all of it, but in a way. So we got bought a call for 43, bought a call, sold, okay. But then look at here, historic volume and open interest over the last 10 days. This is interesting to me. You have relatively no volume, and then out of nowhere 338. Why? Like that's unusual. That's the whole premise on unusual wells, finding unusual activity, right? So you go down a little further and you got 10 big dark pool trades recently, right? Well, we got a couple millions here, a couple 100,000. All right, cool. This piece I love that unusual gives you this, because it's giving you who is buying in government specifically, right? So Mr. Alan S. Lowenthal, interesting. I wonder what information you received to have bought Draftkings. Down here at this last piece, I like to always go here. This is just a preference. You don't, again, nothing of what I do you have to do. This is, I'm just showing you what I do before I ever make a video or record on a play. I like to go down here and go through the hour settings to see what ratings it has. As you guys can see, it's at a strong sell. Basically, I trade a lot on the 1-day chart. So that's not necessarily a good sign, but it's not a bad one either, right? It's just going to give you information. You go and click on the ticker, it's going to take you to this landing page, right? This page is pretty important because it gives you some insider trading. It'll give you the website to the company. It'll give you some bare bones, you know, financials. And then it gives you down here the alerts table. What alerts have been going through and when, right? So today we have 2 bullish alerts. 3 days ago, we have a bearish alert. A week ago, we have a bearish alert. 2 bearish alerts. It's good to know, like, historically, what are people vibing? What are they feeling, right? But normally what I'll do at this point is I click on this where it says Draftkings Flow. It's going to take you to this landing page. Now this landing page is pretty important if you know how to read it, right? It seems really confusing only at first, but it's not. I always take away the price and the total open interest because that's not relevant to me, right? I can go find that on a chart if I need it. But what does interest me is call volume and put volume, right? I want to see if there are spikes, something like this, or like this, or like this, or like that's interesting, right? Well, let's say this is just spike to this point, for example, right? Kind of like it is now. That's interesting because that tells you, okay, there's something going on or some people going into this, right? And why? Now you got to find out the why. It's like a crime. You got to figure out the why behind it, right? I like to look at this too, where it says average 30-day call volume. You see 120,000. Put volume 39,000. That's a big disparity. 7 days, you have 45,000 to 153. Okay, so that's 2 significant bullish marks. And then 3-day, 149,000 to 36,000. So this is definitely on the call side. But again, you always have to remember at this point, just because it's on the call side doesn't make it bullish. You can easily sell a call and it's bearish, right? So just keep that in the back of your mind. Take this stuff with a grain of salt. It's compiling all the data together and to tell you a story of what it's going to do potentially, right? That makes this tool so powerful. So at this point, you can click here where it says see today's breakdown and it'll take you to some dark pool data. I mean, for some stocks I do that. For Draftkings, I don't think that's really necessary. That's not something I want to get into. So we're going to stick to right here on the right side where it says Draftkings levels. Now, when you click on this, what it does is it breaks down the flow by premium amounts to try to segment it for you so you can see a visual. People spending 1,000, people spending 5,000, people spending 15,000, or excuse me, 10,000, 15,000, 30,000, right? And it breaks it down by categories so you can see like small money, medium money, and then large money. What are they doing? So now, this is without any filter, straight flow. So as we see, what are we seeing? 1029 bullish over bearish. At what strike? 50. Okay, that's good. For people spending under $1,000, that's bullish. But now, what about people spending 5,000? Okay, so look, now it's changed. Now it's kind of flat up until we get to July 15, 2022. Give me 1 second. I don't know why my Mac likes to do this, but it zooms me out, and then I have to zoom back in manually to see it better, right? And we see, once again, at the $65 strike. So let's go a little bit further. 15,000. Once again, now you see it's bearish over bullish. The one that stands out the most is January 2023. And then at the $70 strike. Okay, so this is, if you're looking at this and interpreting in your head, it's a bearish put, for example, let's just say, right, for January 2023, but a put at $70. So you could easily sell a put, right? And you could target it at 70, and that makes you bullish, right? Keep that again in the back of your mind. You have to kind of understand the fundamentals of options to make this really impactful. And then 30,000. So this is big money, right? What is big money doing? Well, first of all, it's bearish over bullish, right? The January 2023 once again stands out, and they are targeting as well the $70 strike. So, all right, at this point, this is what I would do if I were interested in pursuing this further. Right here at the top where you see flow ticker, DKNG, right? You type it. For my Mac, I have to either hit this X or hit enter. Then I click on flow. Now it's going to take me directly to this page's flow. As always, I go to table settings first. I want to see the delta. I want to see what people are targeting. Then I go into filters. Now, at this point, this is strictly by your preference, right? I like to view what is out of the money, right? What are people speculating, right? Because if you're in the money, you could just be playing a high delta, and that's why you're playing it. But for out of the money, you are speculating. You have a projection or an expectation of what something can do, right? Out of the money, no filter by premium. This is the only thing I've done. Look at the call premium, 23 million versus 33 on the put side. Well, as I mentioned, you could easily sell a put like this, and that makes it bullish, right? Don't always assume just because you see put high that it's bearish. No, you have to break it down. Call volume, we have 180,000 call contracts versus 92,000 put contracts. And then put premium or bullish premium, you have 19.69 million or 34.94%. Put premium, you have 36.67 million at 65%. So when I go into this piece, I go into this chart because I want to see the visual, right? Now, looking at the visual, it gives you a better understanding. So first of all, we are bearish over bullish for all the strikes, essentially. No disparity there. And then what strikes? 40, 48, 50, right? And I guess you could call this 59. So now let's go and start breaking down by category. So first, normally at this point, what I'll do is I'll enter 10,000 here. Let it filter by 10,000. So at this point, you either have to spend 10,000 or more for me to be able to see what option you purchased. Now look at right away. What do you see? A lot more green. So people with a little bit of money are actually bullish at that point, or you would think they're bullish, right? You click on go back to the charts, and now let's take a look. So first and foremost, all the expirations are essentially over bullish over bearish. That's good. Obviously, you want to see a peak higher for the shorter dates, but for this video, it's December 17th this year, February 2022, July 2022. At what strikes? So it looks like they're targeting the $65 strike. That's heavily targeted, right? So we go back. As in the previous video, we go into 15,000. And now we want to filter by people spending at least $15,000. Go back into the charts. The pies look pretty good, mostly green, a little bit of red. But see, again, it's changed, right? As you go through different levels, it's going to give you a different pattern, right? What you're trying to do, or what I try to do when I do this, is I want to find bullish in just about all categories, because that gives you a consensus. Whether you got $1 or whether you got $1 million, you're feeling this is going to be bullish, right? But if you start getting the mixed bag, that's where you kind of need to be careful, and you need to really, really understand charting. So again, bearish over bullish, go back. Now let's go, we'll skip the 20,000 and 25. We'll just go to the big money. Let's go 30,000. And again, guys, this is my preference. You could easily do this every single thousands and you get different intervals. I'm just trying to, you know, for the purpose of the video, try to keep it short. I know you guys prefer shorter videos versus longer videos. So at 30,000, so this is what you consider big money. We are bearish over bullish, with exception to this strike down here, January 2023, and what is that? January this year, 2022. So that's relatively soon. That's probably what, 90 days, 145, something like that. And let's see what strike. So now we are targeting the $50 strike, and looks like we got some money on the $70 strike. So at this point, we can kind of gauge. This is either, I guess, 50-50, if you will. There's not really a general or unified understanding of what this is. So at this point, if I'm still interested in this play, what I would do is I would pull out my chart. This is my Thinkorswim. I use many. I have many platforms. That's another thing. Don't keep just one platform. DKNG. So Draftkings. We are on the one day, 1 year chart, as I like to. As you guys can see, I have clearly had an interest in this. As you see already, support and resistance mapped out on the chart. And we are sitting down here, essentially. You see this massive red day that we had today? Essentially down 5.74%, or down $2.81. However, you need to pay attention to a couple things. See this downtrend? It's being heavily respected. We have not broken through that yet. So until we break through that, meaning we start formulating candles on the top side of this line, it's still in a bearish pattern. So that needs to be understood. However, You always want to use your indicators. Now, if you've watched any of my videos, I use in every single play that I invest in MACD, RSI, ATR. Why? Using these indicators, you have a higher probability to become profitable because you have more data to understand from the chart. The chart's going to tell you something. It's you being able to read it that's going to make the difference whether you will be profitable or not. Reading charts is not difficult. It just takes practice. You have to put time into charts, right? You have to learn how to set support and resistance. You have to learn how to draw a trend line. You have to understand what it means to be trading under a 50 MA, right? You have to understand what it means when a short-term moving average crosses a long-term MA, right? This is a death cross, for those of you that do not know. Death cross always include rundowns. When a short-term MA crosses over a long-term MA, that is a golden cross. That's a run-up expectation, kind of like here. We cross to the upside, we get a run-up. It works. Like, people say TA doesn't work. I promise you it works. It's made me incredibly profitable versus when I didn't use it and I would consistently lose money, right? So being that we see this, let's get back to the play. We see that we just converged into a buying period. That normally means you're going to have a higher propensity of green days versus red days. Does that mean that that is the case every single time? No. That's just what it's supposed to indicate, because again, this is an indicator of what it's reading on the chart, which it's reading the candles. In your RSI, this one is really important. What do we see? We're literally sitting essentially at oversold. So stocks can't live at oversold. We can look at the historical history of this play, Draftkings, and you see anytime it's at oversold, it tries to push away from it. Every time. It doesn't just sit here for long periods of time. I think this is probably the longest one. 1, 2, 3, 4, 5 days on this occasion, right? We can go back further. What is that? 1, 2, 3 days, right? So as you see, if it does get to oversold, it likes to push to the upside. This time here, for example, we were trading at 35. We had a run up all the way till we approached overbought at 74. That was a pretty good run, right? This is all one consistent run just from that one crossover, right? Is it going to be like that every time? No, but you take previous information to kind of interpret what something could potentially do. We did another rundown. We hit oversold, and what did we do after that? We went on another tear. So this time we went from 40 essentially all the way up to 64. It's a pretty good run up. So now that we're here again, now we're here, but we're high. We made a higher low. So we went, instead of being at 40, now we're sitting essentially at 46. If we fall to support, we could expect to fall here to 44.67. That's why it's important to map support and resistance. Let's just say this RSI continues to dip down and goes below it. We're sitting at 44.67. What would that lead you to believe based on the previous year and a half history of what this play has done? Well, for me, this is my opinion. I would be interpreting that this is going to then run up. And I'd be willing to bet even further. That's why in certain categories, this is getting to the point where it's bullish, because people are preparing for that, because they know that already, right? Anyone that's been in the market for a really long time, I'm sure, has seen, okay, so Draftkings is sitting on essentially oversold. We need to start preparing either for mid-November, early December, right? Well, what's going to start happening? NBA is going to start playing in full season, so people are going to start gambling on the NBA. What's going to happen in the NFL? Well, we're going to get to the point where we're going to get close to playoffs, so people are going to start playing playoff picks. Again, you have to consider all facts, because what is DraftKings? It's a sports betting app, right? So that should kind of give you an idea of how I use it. Specifically, we can go back to the alerts. Let's see if we find another one, just to do really quickly without actually doing any more explanations. So what am I looking for? Let's see. We did Snap, we did Twitter, the VIX, DM, Square, Hood. They sure do love to rob the hood. QQQ, DraftKings, Coin. Coin's popular. Disney. This is interesting, but they always have good stuff. Twitter. I love Twitter. Palantir, Pins. As you see, a heart on Pins. That's a play I'm watching. Let's do the other gaming one. So here we have Penn National, right? $82 call, right? So this one is for October 29th. So again, next Friday at $82. Underlying is sitting at 74. So this has potential. Now let's take a look at the big trades. Sell a call, sell a call, sell a call, sell a call, but they're selling calls at 82. What that should tell you automatically, okay, people that are holding this stock or have these shares are willing to part with those shares at 82 if they hit 82. So they took a premium payout for this. thinking that they wouldn't hit, but potentially it could, right? Now, on the other side, people that are projecting an expectation, you see that they're targeting it could hit 82, right? Now, do we know if this isn't the same party? No one really knows. We'll never know, right? But I do know that it is pretty larger amounts, so that's promising. Looking at the volume, check it out. Nothing, 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 nothing. Picking up, picking up, picking up, picking up. Boom, 17,000. That's a lot. That's interesting. That makes me really bullish on this. All right. Okay. We have insider or government buying. Let's see. February 2021. All right. Sounds like somebody knew that gaming was going to be a thing in 2021. Let's go to the 1-day chart. See what rating we get. Strong sell. Interesting. All right. So let's go into it. Any insider selling and buying? Nope. Nothing recent. Let's take a look at the historical alerts. What do we got? Bearish, bullish, 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 bearish, and this is about through the middle of the month, so I don't want to go past that. All right, so now let's look at the flow. So if you remember, hit on pin flow. It's going to take you to this place. I take away total interest and price. Now, what did I tell you earlier we look for here? Spikes. Look at that nice little spike. Right, so this is already promising, right? Look at the last time we had these spikes. I'm guarantee you that these are tied to run-ups. So at this point, you can click on breakdown. Again, remember, and this will take you some Blackpool data. I like to click on the levels because I want to see the breakdown by price segmented. So at 1,000, we are bearish essentially for expirations and strikes. At 5,000, ooh, interesting. That was today. But next Friday, we are essentially bearish. And looks like 60... and the 77 are bullish. Ooh, look at this. $15,000 or more spending. All strikes are essentially bullish. 1029 heavily, and January 2022 as well as June 2022. At what strike? 30? I'm interested in the big one. 76. God damn it, I hate that it does this. Alright, 76 and then 100 are heavily targeted. 30,000 or more? Look at that. That's promising. 1029. All right, and look, let's see, 70, 76, 100. Interesting. All right, I'm definitely interested in this. So up here, we once again put our ticker in, and then you go back over here, hit flow. Now it's going to take me directly to this flow. Unfortunately, it won't save your table settings, so you have to go back in and set them every time. Not a big deal, not a problem. So I like to go once again out of the money. I want to see what people are speculating now. Sell call, but look at these calls being sold. 100, 80, 82. Remember, we're sitting at 74. It's a nice run up. 76, 73, 79. What else? Sold put at 71. Okay. Interesting. Oh, this is, people are expecting this to run up. So going into the charts once again, now you see the dynamic has changed. It didn't give you what it gave you earlier, but that's okay because you have to filter the data to understand it. So let's go to the first category. 10,000. Come on. Internet, don't fail me now. All right. Ooh, bullish 1029. I like it. What strike? 76, 80. Okay, I'm interested now for damn sure. Let's see. 15,000. Let's see. Ooh, bearish. Okay, interesting. All strikes as well. All right, let's see about big money though. See what the big boys are saying. 30,000 premium. All right, so lots of big numbers thrown at this. All right, interesting. 480,000 on a sold put at 70. Huh. Sounds like they might know something, huh? 400,000 once again, so that's now 1.1 million. Call at 83. Okay. 190,000, 100,000 on a $65 put. Wow, person's bold. Let's see. Charts. Okay, so once again, now you see we're still bearish over bullish. It didn't definitely give us a concise answer. If you would have just based or formulated an opinion just from the first, I know a lot of you guys probably would have just gone out and picked up a $100 call because it's probably the cheapest and said YOLO, right? But no, it's not the way we win in the market. You have to learn fundamentals. You have to have some rules to give you conviction in plays. If you go pull up the chart, I guarantee you something's going to be off that's making people suspect, oh, wow, yeah, that it's going to run down. So, actually, let's see. So, we are sitting essentially at 74.63. We had a red day today. We are down 3.38% or down $2.61. We are in a buying period on the MACD, as you do see this conversions arrow. We're essentially sitting 47.71, so a little bit below neutral. Neutral would be somewhere around here. And then our ATR is essentially showing us $3.29, so a $6.60 swing, or 59-cent swing, 58-cent swing to the upside or to the downside, right? So now that you know that, right, I would say specifically for this, I would give this a couple more days, but I would heavily watch the flow, right? Because in the next couple of days, a couple things are going to happen. It's either going to go heavy to the bullish side or heavy to the bearish side. I guarantee you, if we look at this option chain, it's going to be wild in here. So, waiting for data. Yep, not that one. This one, October 29th. Now, we're sitting here at 74. So, look at the volume. 17,000 on the $82 strike. Interesting. What about on the put side? Nothing even close. So, yeah, this is leaning heavily to the bullish side. This one, for example, if you wanted to participate and follow along with these players that are here, right, you would be spending anywhere from $27 to $29 or $27 to $29. Very close spread, is bullish as well. $82 expiration. Me personally, if you watch any of my videos, I pursue options with 0.50 delta or better, so that I give myself a better percentage of being in the red, or in the green, excuse me. So I would be more in line to pursue this, the $74 strike with a 0.56 delta, giving myself a 56% opportunity to be profitable, earning $56 for every $1 pen were it to go up. I am going to label this and watch this. I will be watching Monday, Tuesday, and Wednesday. Maybe by Tuesday I'll have a definitive answer if I'll go in short term, or by then we'll get a better understanding if we can do this expiration or maybe one or two out. But again, this is how you use alerts to pinpoint you to opportunities you can participate in the market. I think you guys get the point. I hope you guys get the point. But as always, guys, if you have questions, please leave it in the comments down below. If you made it to the end of the video, please give me a like if you appreciate the content, or don't forget to subscribe to the channel as I continue to try to produce content for you guys that helps you fundamentally, so that once again, you don't have to slave in that 9 to 5. You can simply just hustle 24/7 and be profitable. Don't forget, you can hit me up on Twitter and IG. And until then, guys, I'll catch you in the next one.